If I started investing right now from scratch, from nothing, I would keep it simple. No investing in individual stocks, no crypto, no day trading, no Forex. Instead, I would do exactly what I'm going to be sharing in this video. So whether you're starting with $20 or $2,000, I'm about to give you a step-by-step plan and strategy for how to start investing. Starting with the first thing that I would do, which is invest in my future. Now, if I'm just getting started with investing, I'm not going to jump straight into a brokerage account. I'm going to start investing in my retirement. Not only do I want to secure my future, but I also want to take advantage of the tax incentives as well. Now, if I had a traditional job, this would mean a 401k. And in this case, I'm going to invest enough to make sure that I am getting my company match. Now, for most companies, they're going to match up to a certain percentage of what you put in your retirement account. Now, when I was working a few years ago, the company that I worked for matched 50 cents on every dollar that I invested in my retirement account up to 6% of my salary. So as I was contributing to my retirement, I was also getting free money from my employer. So if I'm just starting with investing, this is the first place that I'm going to go so that I can take advantage of that match. But also it would allow me to reduce my taxable income as well. Now, when I am investing in that 401k, I want to make sure that it is a Roth 401k, meaning the money is going into the account after I've already paid taxes so that when I'm old and gray and ready to retire, I don't have to pay taxes again. Now, when it comes to what I'm actually going to invest in within that 401k account, I'm also going to keep that simple and I'm just going to do a target date fund, meaning I'm going to go in there and I'm going to tell it what year I'm going to turn 65 and it's going to go in there and automatically adjust my investments accordingly. So as time goes by, it's going to adjust it to be more conservative as I get older so that I have money to retire. So first things first, if I'm starting to invest right now, the very first place that I would go is that retirement account, making sure that it is a Roth 401k and also knowing that I'm going to invest in a target date fund so I don't even have to think about what I need to invest in. Now, seeing as I'm an entrepreneur and I have not had a job in a while, I would open up a Roth IRA, which is an individual retirement account. I would take that same approach, making sure I'm maximizing how much I can invest according to the guidelines for that year. And then in this case, instead of investing in a target date fund, I would be investing in something like an index fund that's going to track the S&P 500 so that my investments are diversified. And so I'm not risking losing money by the time I'm at retirement age. In the same way that a Roth 401k is going to be tax-free at my retirement age, so would a Roth IRA. Now, I would do something like a Roth IRA at a brokerage like Vanguard, Fidelity, Charles Schwab. Any of those would be fitting for opening up a Roth IRA. Now, if you're in the same situation as me where you don't have an employer, you're self-employed and you're an entrepreneur, you want to make sure that you actually have earned income and making sure you're following the guidelines of what it takes to be able to invest in a Roth IRA because you don't want problems with the IRA. Now, don't get me wrong, retirement is important, but I've had financial goals before I turned 65. So once I have squared my retirement away, I've maxed out my retirement account, I've got my contributions on a regular basis, and I'm getting that company match, then the next thing that I'm going to do is open a brokerage account. Now, once I open that brokerage account, I'm not going to be investing in individual stocks. No. As a beginner, if I'm just getting started, I want to make this as simple as possible, and I want to eliminate as much risk as possible. So in that case, when I start investing, I'm going to invest in an index fund that tracks the S&P 500. Now, these investments would track the 500 largest U.S. publicly traded companies, which would be Apple, Amazon, Google. You get the picture. Now, by doing this, it would allow me to diversify my investments and have less risk, which is what I'm looking for if I'm just getting started in the stock market. So instead of putting all of my money in individual companies that could literally tank and I lose all my money, I am going to invest in an ETF or an index fund that allows me to still invest in all these companies, but not have all of my eggs in one basket. Now, what I do know is that historically, the S&P 500 has had a 10% annual return over the long run. So I know that if I just put my money on the S&P 500, I'm going to get an average of a 10% return over time. Now, if I'm investing in the stock market, I'm not looking to have a quick win. And that's exactly why I'm not going to be doing day trading or Forex. I'm in for the long run to build wealth passively. So I'm going to want to have something that has a historical return rate. And so that's why I'm going to go with that S&P 500. Not only does it automatically diversify me and it reduces my risk, but I can bet on getting a return in the long run. So once I've decided on the ETF that I'm going to invest in, the next thing that I'm going to do is set up automatic investing. So I'm going to link my bank account and I'm going to set it up for every time that I get paid is going to invest in that ETF. Now, when I set this up, I'm going to set it up to take a specific dollar amount for every pay period. So that will be something like $20 every pay period. And it's going to allow me to invest a fraction of the ETF, or if you are buying an individual stock, a fraction of a share. This allows me to still invest while not having to have the full amount for the investment. And this is called dollar cost averaging. So I'm going to get fractions of a share or fractions of an ETF. And over time, that's going to build up and I'm going to be able to continuously invest. So even if I don't have the full amount to buy the ETF as one purchase, I can start buying fractions of it over time, which allows me to consistently invest at a rate that I'm able to at the time. So it doesn't matter how small of an amount I have, I'm still able to invest, and those small amounts add up over time. Now, over time, I know that I'm going to see this investment grow, and depending on what I purchase, I'm also going to start seeing dividends from my investment. So occasionally, the companies are going to give me a part of their profits. And so instead of cashing that money out, I'm going to reinvest that money and buy more of that ETF, buy more of those shares. And this is simply going to be called dividend reinvestment. So I'm going to go into my brokerage account and I'm going to set that up to do it automatically. So I'm going to automatically buy stocks, but then I'm also going to automatically reinvest any dividends into those ETFs that I originally purchased. By doing this, I know that I'm compounding my money even faster over time. Now, after I've set up my automatic investing or dollar cost averaging and my automatic dividend reinvestment, the next thing that I'm going to do is where most people trip up. And that is going to be the fact that I'm going to leave it alone. I'm not going to bother it. I've already set up everything to be automated. I am just going to let my money grow. I'm going to let it compound. I'm going to check it occasionally, but I'm not going to stress out if the market goes down. I'm not going to sell off my shares out of panic. I'm not going to let this become an emotional roller coaster. I'm simply going to let my money grow because historically, based on the S&P 500, I know that my money is going to grow over time. So there's no need for me to worry about it now. I've already set up the system, so I just have to trust it to work. Now, if you want to know how to set up these systems step by step, like over my shoulder, watching my screen, check out this next video.